What do we have there? Linear regression equation. We know that a linear regression equation is basically an equation of this form. Y equals A plus B1 x1 plus B2 x2. But now remember this question, we only have one independent variable, which is x. So basically, our y will be equal to A plus B1 x1, or simply A plus bx, like that. So don't forget that A is the intercept, which in this question has been provided. In this question, have they given us the intercept under the coefficient? So yes, the intercept coefficient is 509.9119. And then in this case here, we know that B is the gradient, which is the same as coefficient of x, coefficient of the predictor variable. Yeah, which in this particular case, B, they have given me the coefficient of variable x, which is 29.4529, like that. And now the moment you have that, really, our y will be equal to A that is now 509 plus B, 29.4529, x1, or just x, it doesn't matter, like that. And you saw so many guys. I made it, yeah. That's very good, Jackie, yeah. So very good, very good. So this one, everybody got this right. So we look at part 2, where they want us to predict the total cost of repair if 14 hours are used. So if you read up there, motor cars repairs is in the process of estimating fixed cost and variable cost components associated with the company's repair activity using the cost estimation equation in the form y equals, where y is the total cost and A is the fixed component, variable component is x, a level of repair activity in hours. So it means that this x1 or x is 14. So therefore, number 2, our y will be 509.9119 plus 29.40529 times value of x, which is 14. So they're giving us a figure of what they are, 921 point what year, 0.59. 921.59. 921.59. So remember that this y is the cost. So they wanted us to give them the total cost. Automatically, that is total cost. And then they want us, number 3, to do something very easy. In number 3, ladies and gentlemen, they want us to compute the value of the missing letters x and y. Iko mwenye anaweza compute kweli those missing values, x and y. Like I can see x there is under mean squares. MS, mean sum of squares. MS is the mean sum of squares. Do we have anybody who is able to remember how we did this? I can see a good ninja there called Peter. Yeah, I can also see Ngugi there. So wanasema, ladies and gentlemen, in this case, but I need to ask first of all, as much as I would want to do this question pretty fast, is there somebody who is seeing these figures, this kind of a question for the very first time? Today is your day number 1 to see this. I have a solution for you. In the learning management system, there are videos there touching on this and over. After we finish this, ensure that you watch those videos. We have a good ninja here called Tony. Tony can go to that LMS, screenshots it, and then he's able to pinpoint those videos for you. He can easily pinpoint those videos for you. Yeah. So they're giving me a figure there. They're telling me, ladies and gentlemen, that to get mean sum of squares, in this case here, take the sum of squares given, you divide this by degrees of what year? You divide this by degrees of freedom. Yeah, so then what we shall do under x we can see, under x is the mean sum of squares, Yeah, so then this one here will be, the sum of squares given there is 46.476 divided by degrees of freedom, which are 4, like that. So then X will end up giving us a what figure? I can see an answer here, 10, 36.10, 36.619. Thank you so much. Great. Thank you so much. Great. That's very, very good. And then Y is about the T statistic. Y is about the T statistic. Is there anybody who is able to remind us the formula of T? How do we get the T statistic? Anybody who is able to remind us the formula for getting the T statistic? Abracadabra. T statistic. It is coefficient divided by standard error. Thank you so much. It is coefficient divided by the standard error. Coefficient divided by the standard error. That is how we get, ladies and gentlemen, our T statistic. So to get our T statistic, so T statistic, you take the coefficient itself divided by its corresponding standard error. So then, are you able to see the coefficient? Are you able to see the coefficient? Are you able to see the coefficient? The one that corresponds to Y, the coefficient is 509. The coefficient is 509, the one that corresponds to Y. The coefficient is 509.9119, 9119, all over the corresponding standard error there, which is 45.55789, which then will end up giving us what figure? 11.193, like that. I'm so sure up to here, there are ninjas who would have gotten this very, very easily. So Roman 3, that's okay. Very good. So they want us to explain the explanatory power of the model using the coefficient of determination. This was an easy examiner. It is upon you, ladies and gentlemen, to remember something very nice here. That we have what we call R squared. We have what we call R squared. And the R squared is the coefficient of determination. This is the coefficient of determination, which gives us, ladies and gentlemen, what we call explained variance proportion. It is the explained variance proportion. Explained variance proportion. Explained variance proportion, like that. Now, ladies and gentlemen, the moment in this case you understand that, then we'll be able to look for that figure. Have they given us this figure called the coefficient of determination anywhere there? In percentage, is there somebody who is able to write for us in percentage? Francisca. Yeah, so in that case here we have 96.93, eh? Around R squared is 96.93%. 96.93%. So then that 96.93%, I will give you 2 minutes. I've seen somebody who has tried explaining it there. I would want to see what you guys will have said in an exam if you got that kind of a question. So remember that automatically would mean that this model is like, it's able to explain all the variances by itself. So thank you so much. I can see what people are saying down here. That, the predictor variable, explains 96.93% of the variation in the dependent variable, showing that the model is significant. showing that the model is a good model for prediction purposes. Yeah, it explains about the independence of predictor variable, not that one, Maslin. Change in total repair cost of 96.93 caused by change in level of repair activity, while 3.1% is caused by other factors not in the model. I love that, yeah. Jackie, coefficient termination 96.93 caused by change in level of repair activity. No, I'm reading. Coefficient termination of 96.9 explains factors causing change in the model. Factors causing change in the model, while the rest, which is 3.1%, are other factors outside the model. What I remember is that the higher the R squared, the better. You're still in line with what we're saying there. R squared explains variance of proportion. The higher it is, the better it is for the model. It is for model for prediction. Changes in the model are explained by 96.93 of the model, while the rest are other factors like that. Ladies and gentlemen, we have here this one. Remember, it was y equals a plus bx. So whenever you see this 96.93, it means that 96.93 variations in y are accounted for by changes in what here? By changes in x. So 96.93, anytime in this case here we have this x changing, which automatically means that y will change. The change in y all the way up to 96.93% change in y is accounted for by changes in what here? In x. So it means that there must be another, however insignificant factor, which also is able to influence y. There must be another factor out there, which will be very, very insignificant, which somebody has been able to rightly say it is 3.1. So 3.1% of changes in y is attributable to other factors which are not where in this model. So as a statistician, will I start in this case here doing a whole other research to bring in another variable for only 3%? No. We normally say in statistics, ladies and gentlemen, if your variables, the variables that you have, are able to account for at least 75%, you are good to go. So it means automatically, ladies and gentlemen, 96.93, this basically is a higher explanatory power. Because in this case here, the changes in x, the changes in y, 96.93% are being explained by this factor x. So it means that the model has a very high explanatory power. The model has a very high explanatory power. What I'll be watching out when I mark your scripts, when you get, for example, r squared of say 60%. So simply tell us that the changes in the response variable, which is y, are accounted, 60% of the changes in y are accounted for by this predictor variable. That now we have in this case here a whole 40% change in y, which is attributable to other factors which are not in the model. 40% is very significant. I will recommend, as your research supervisor, drop that model. Try in this case here looking for what here are the variables. And if you're not able to get independent variables, then I'll ask for what we call intervening variables to push this thing higher. We like it if it is at least 75%. Otherwise, your model will not be making any sense. So I believe, ladies and gentlemen, with that one, you are good to go. And then now we can do the very last part there, which wanted us to explain if the independent variable is economically plausible as a predictor variable. Is it economically plausible? Remember what I asked you in class some time back. Unfortunately, what I've realized, you guys, and again, I cannot blame you, you guys are really, really, really busy outside here. It's like you don't get enough time to watch those videos. You don't get enough time to watch those videos. So, and you cannot blame students really. Some of you are family people, but I have to squeeze you. I will squeeze you until you pass, even if you have 7 children with a very, very busy role. I must push you. This remaining 1 week, is it 1 week or a few days? We have to work very hard, especially for AMA. AMA, no retake. AMA, 1 term. We should clear this AMA. We should clear this AMA, 1 term. So it doesn't matter how busy you are. These 4 days, it's good that I'm able to see this number is increasing. All of you are on leave, isn't it? All of us are on leave now, right? All of us are on leave. Oh, you are doing other units. Yes. Kila mahali. Yeah. And na tuko job. Okay. Kwa nini bado wako job? Amwezi pembeleza tu hawa jamaa mwambie 3 days. Like yesterday, I was very, very happy because I realized those guys who are now near Nairobi here, they are able to come to our offices to study from there. I was very, very happy. Like all rooms, like now they are full. And we allow people, you simply come to Commonwealth House. Nobody will ask you. Commonwealth House, 5th floor. Simply say you are an online student and you would want to study on your own. I was so happy to see so many of them. Yeah. They're now reading. Everyone is taking their own corner because, ladies and gentlemen, again, you need to agree with me. Studying from home is not the very, very best. Mimi najuanga, mimi niko na experience. Utapata mtu anasema, sasa wacha kidogo nikule. Nikikula lunch, nitaanza kusoma sawa. Kidogo jamaa kamata ugali, jasho kidogo namna hii anasema acha nitaamuka. Will that fella wake up really? Akiamuka ni jioni namna hii, kidogo tena mama amemtengenezea kitu namna hii. Yeah, kidogo anasema sasa nitaamuka saa 10. That fellow will never wake up. Inafika paka time jamaa anasema sasa wacha mtihani kuje vile itakuja. And yet I can tell you 4 days like this, those days are a game changer. If, for example, you are in Nakuru, right, you can easily go to the library. There is a library around there, all right? You can as well, in this case here, meet with a colleague here. Say, in this case here, this colleague, we can go to a cheaper restaurant, have a cup of coffee like that, and that colleague must be a serious person. So in this, even if you're not discussing, but at least you have some support system. Otherwise, we'll keep on postponing, and then we'll get ourselves come Monday, Tuesday, you are simply going to an exam to try things, and yet you are a game-changing duration. These 4 days, I'm telling you, they are game changers. And it's very easy. Like this paper has about 8 topics. If I were you, number 1, I would run to that video where we discussed environmental management accounting. Read those things about components of, in this case here, environmental management accounting. Why is it important for an organization to, all right, account for environmental costs? It will make you innovative. Watch that thing. It's about 1 hour. It's about 1 hour. Look for these theories on budgets. Yeah, those ones I must also be very, very good with them. I already gave you a handout on those theories. Yeah. So every hour you should be very, very productive. Otherwise, remember, you're coming from a very, very busy place. Your workplace is very, very busy. And then you've been given 4 days. Your body automatically will ask for rest. That's the first thing it will do. That is why you'll even be surprised. Even today, I'm so sure there must be somebody who slept up to 9 a.m. Are we there? Those people who slept up to 9 a.m., are we there? Let's talk. Let's be honest. Let's talk. Yesterday, I'm telling you, you guys are my children, academic children. Very, very good people. These 4-5 days, they're a game changer. Come up with a timetable. Jifanye mtoto mdogo. Mtoto mdogo, kumbuka, ufalme wa mbinguni ni wako. Utapita vizuri sana. So timetable kwa umesema hivyo, jifanye hivyo tu. Yeah, and then of course you must give yourself lots of breaks as you study. You must give yourself lots of breaks here. Like you do 1 hour, wake up, stretch a little bit. All right? Take lots of water, very, very important. You must hydrate because you are using a lot of energy. All right? Yeah. Then avoid TikTok. This is the time when you will get so many nice things coming on TikTok. That's how the devil works. When you need to be really serious with whatever, that is when you scroll up, you get, in this case here, wamutende. You want to listen to those things all over. And then you waste the whole day. TikTok, you can even remove it. And then you can come back to it after exams, because that's a time waster. Also WhatsApp, you don't be coming to WhatsApp every time. This is the time when you get so many friends of yours who would want to talk to you. Also, that's a time waster. You must try to remove all the time wasters just for a small window, small season. After that, ladies and gentlemen, we will be here, yours faithfully. We'll be here, yours faithfully. You will be able to pass. That will be very, very good. Yeah, sleeping for 8 hours is really, really compulsory. 7 hours, it's very, very good. But now from there, the other time you plan it very, very well. Yes. Ya, hii akura hiyo naachana nayo kabisa. Library iko na babies saa hii, wanashangaa hii wazee wamekuja. Haina shida kiprop, wewe enda soma. Nimekuambia ufalme wa mbinguni ya watoto wadogo. Nisalimie mama jikoni, at the end of the day, international disaster. Yeah, uninstall them for now. Uninstall all of them for now, because now they have got crazy, great things. Instagram, we shall overcome that. Instagram, ladies and gentlemen, will be very, very good. Over December, we have a lot of time. I miss watching news. Yeah. So then that is really, really important. So remember what I asked you when we talk about this plausibility. I asked you, ladies and gentlemen, look at this. Yeah. The size of your head. Yeah. Versus effectiveness of an accountant. Yeah. So in this case, if you got this kind of an equation that has got two variables, where the dependent variable, the dependent variable y is this one, effectiveness of an accountant versus the size of your head. An equation that says that the bigger the head you have, the more effective you are as an accountant. Will that function really make sense? Will that model be effective for prediction? Is there a real relationship there? No. That is what we call a spurious relationship. Spurious means what here? Nonsense relationship. A nonsense relationship. Because, ladies and gentlemen, honestly speaking, you may have a very, very small, tiny head like this, but your effectiveness is like this big. Or you can have a very, very big head like mine here, but not effective at all. So this is a nonsense relationship, isn't it? A nonsense relationship. Iko mamefikiwa tayari, eh? A nonsense relationship. All right? What about this one? Let me ask you another question. So this one is never plausible, not plausible. Remember, plausibility is about an economic relationship, a relationship which makes sense. All right. And then now we have this one, my good students. So we have here an equation like this. So we have sales equals 10 minus 2 advertising cost. So for sure we know that advertising and the sales are related, because if you advertise more, then you sell more. But is the relationship supposed to be negative? Is it supposed to be negative? No. It's supposed to be what here? Positive, yes. Because the more we advertise, the more we sell. So it's supposed to be positive. So should I go to an exam, get the examiner has given me a relationship which has got really good functional variables, but the relationship is in the opposite, then that one will be spurious. Nonsense. Will be nonsense. It doesn't make any economic sense, any economic relationship. How about our variables in the equation? Remember, our model looks like this. Our model, if you remember very well, our model is about our model is about repair cost. Is it repair cost? Total repair cost, yeah. Total repair costs equals A that is 509 point what here, 9119 plus 29 point something, 29.40 X, and X happens to be repair activity in hours, repair activity in hours. So hours, repair hours. So ladies and gentlemen, first of all, we ask ourselves, repair hours and repair costs, are they related? Do they have a relationship? Yes. If I have a vehicle, of course, when I take it to the garage, the more the hours, the more the repair cost will be. There is a relationship there. And then, is this relationship clearly well defined? Yes, it's a positive relationship. It's supposed to be a positive relationship. The more the repair hours, the more the repair cost. So in this particular case, we are able to see that this particular model, ladies and gentlemen, is a plausible model. So the model makes sense. The model makes sense, i.e., it is plausible. It is plausible since repair hours, and repair cost. And repair costs are supposed to be positively related. To be positively related. And this is what exactly the formula shows. There is a positive relationship between repair cost and what here? Repair hours, like that. So just be very, very keen with the sign and the general knowledge that you have over the relationships. Yeah, but if you go and, for example, get, we have maize, then we have in this case here rainfall, maize and rainfall. So the two of them, do they have a relationship? Yes. The more the rainfall, of course, the more the output of maize should be. But if you get an examiner, and they has used this to cheat us some time back, where he spoke about maize in Turkana. Yeah, so maize in Turkana versus rainfall in Mbere. So will you tell us, ladies and gentlemen, because generally rain and maize have a relationship, that these two variables in this case here are plausible? No, this is nonsense. It can't rain in Mbere and then we expect output of maize in Turkana to be high. This automatically is what we call spurious. It's nonsense relationship. Not unless you want to tell me that this rainfall will be able to flow all the way to Turkana through what osmosis. Not possible. Not possible. So you have to really look at the variables and then see whether they are making sense. So even if they gave you a positive relationship, don't start writing like this, that because the relationship is supposed to be positive and the equation itself is positive, that now this is a plausible. No. They could be positive, but look at the variables themselves. Look at the variables themselves. And if you remember very well, I told you even in our social lives, when you get in this case here, for example, couples walking outside here holding hands all over, ladies and gentlemen, trying to show people that they are doing very, very well, that doesn't mean that the relationship is plausible. There could be very, very many waters under current water, isn't it? It could be what we call a spurious water relationship. Ndio maana vijana wa Gen Z mkifanya hivyo wanakuambia mtaachana. Azio anakuwa na maombi mbaya. Kidogo unaona watu wamewachana. So you have to be very, very careful. All right. Somebody told us to do this December 2023. I saw up there. Sheila wants me to do safety stock. Hao ndio matrue, eh? Wana waongelesha ndio matrue, eh? So December, I think this is what somebody told us to do. This that has adequacy. December 2023, question number 2B. December 2023, question number 2B. We can only do one part because I think the other parts we have really, it will be repetition. No, Shayla, I'm not going to do the one of safety stock, Shayla. That one I've already shown you what to do. This great gentleman called Mbudia will be able to show you later on the video. You need to watch Shayla. Shayla, great. You see, also I must run with speed so that I can also pinpoint a few areas for you to do what here, for you to go and look at them, because I can't teach you really to the very end. And again, there are other papers that students want me to also look at. Like AFR students are telling me, Mwalimu now, teachers EPS, etc. So I also need to give them time, right? Yeah, I need to give them time. Great. So have they gotten this December under SPR? LZ has already shown us. Ya mtafute huyu kijana huyo. Yeah, that handsome men are a genius accountants, eh? So will that be, yeah, Maslin has already answered you. Maslin has answered you. Amekwambia Miss Parias. And then there is another person there, and Akuliza, are you handsome? Maybe that person wants to come to any box. That's how people get to meet. But it will be very unfortunate if I get an invitation from any of my students that they would want to marry an accountant. An accountant shall never marry an accountant. We are brothers and sisters. There are good nurses outside there, primary school teachers. Yeah, that we'll talk about that after our exams. I will give you mentorship in that. I'll give you mentorship in that. Yeah. I hope there is nobody already who is married who has done that mistake. I hope there is nobody who has already done that mistake. December 2023. Question number, have you gotten that question? Question number 2B. December 2023. Question number 2B. Or it was 2024, but nimeelewa, eh? So do we do this one ama umeshaelewa tayari? Do we do this one as well? Do we do this one? This one will be coming. Let's just do it pretty fast, eh? Pretty fast. December 2023, question number 2. So we are told their Scotts Limited has experienced stockouts occasioned by the company's poor inventory estimation techniques. The company has therefore engaged you to estimate its demand for the year 2024. The company's accountant had started using regression analysis and availed the following information to you. The demand for the company's product is dependent on disposable income and the price of the products. The analysis of variances table has been given there. The parameter or coefficients estimates and the errors is given. So they want us to develop a regression equation that will be used for prediction purposes. I'm giving you 5 minutes. Do everything, including determine the coefficient of determination, very, very important. Test the adequacy of the model for prediction. If you know very well, I want to believe this is a question you should be able to do in 5 minutes. Eh? So let's see whether you'll be able to do it in 5 minutes. Don't worry. December 2023, question number 2, boy. 5 minutes. I'm giving you exactly 5 minutes. Let's see what you'll have done in those 5 minutes. And then remember, today we are continuing with our revision up to 2 p.m. because AFR will be at night, right? AFR will be at night. I can't do AFR at 1 and then I do AFR at night. No. AFR will be at night, and they have told me expressly to do EPS, isn't it? EPS. December 2023, question number 2. This one here, December 2023, question number 2 is the one we are doing. 5 minutes, please. Let's see your answers. Different, okay. Otieno has done something very nice there. Paul anasema mwalimu tuonyeshe F peke yake. And you guys are very good. You guys are very, very good. The standards about tumeweka hapa si mchezo. Great. So then we start with the first one. So the first one, ladies and gentlemen, that they want us to do there is to give them the model. To give them the model. Yeah, let me just close the door here. All right. So the first one that they want us to give them is a regression equation, which of course I've seen most of you got it right there. So here, regression equation, we have y equals a plus b1 x1 plus b2 x2 like that. So now y will be equal to a. You can see the estimates. You can see the coefficients. You can see the coefficients. Where our a, ladies and gentlemen, if you're not wrong, you can see our a there is 1.5. So 1.5 plus. B1 is negative, so negative 1.4 x1 plus 5x2. 5x2 like that. So is there somebody who was able to get this right? Anybody who was able to get this right? Great. Then number two, they want us to give them coefficient of determination. Coefficient of determination r squared. R squared. So then how do we get r squared? Remember, r squared is explained variance proportion. This is explained variance proportion. Explained variance proportion. How do we get this? It is explained variance. Explained variance in terms of sum of squares all over total variance in terms of sum of squares like that. So you go to your ANOVA table. ANOVA table, you'll be able to see the variances. So in this ANOVA table of ours, ladies and gentlemen, are you able to see our, it's called analysis of variances table. You see ANOVA is analysis of variances. Are you able to see the sum of squares column? Sum of squares column, I can see the model. You see, model is explained. Model is explained. So it is explained what the model is able to explain. So in this case, then our r squared, it will be the explained, the sum of squares, they are 187. All over the total variance, total, which is 191. Whatever answer I get, I multiply by 100. Mercy Korir has been able to give me 97.91%. 97.91. So this is really a very high explanatory power. A very high explanatory power. Don't look for other variables, because the variables that we have in question are able to account for 97.91% of the changes in y. So that's a very, very good model. All right? But let me ask you a question. According to your understanding, given the variables that we have here, will this model be plausible? Will it be plausible? According to your understanding. Remember, this y is demand. X is supposed to be what here? Somebody, they have told us. X is supposed to be X is supposed to be, where's my table now? Yeah, X is supposed to be price, and X2, that's X1. X2 is supposed to be what here? Income. So what relationship do you expect to exist between demand and price? Is it negative? Is it negative? Yeah, because the more expensive stuff are, the lower the demand. So we expected a negative relationship, and that is what the question shows there. Income, the more the income, the higher the demand. If the income of the consumers increases, automatically the demand will be. So here we expected a negative relationship, and the examiner has given us a negative relationship. Here we expected a positive relationship, and the examiner has given us a positive relationship. So this model automatically is economically plausible. Is economically plausible. And I can give you a secret. When the examiner asks you for plausibility and you're not able to understand the question very well, you simply go there and write in capital letters that this model is plausible. 99.9999% of the questions asked here about plausibility, the model is always what you apply. So even if you don't understand, you simply go there and say, this is a plausible model. And even to demonstrate that you have broad and deep understanding, go ahead and tell the examiner that it cannot be spurious. It cannot be spurious. So the examiner will know that they are marking a paper of a very serious student, a genius, a genius. Yes, yes, yes. Great, great, great. So I hope this is okay. After all, you guys were able to get this by yourselves. You were able to get this by yourselves. All right. You will get all the marks, yes. Mr. Wairimo, you will get all the marks. Tuwashtue kabisa Chebet, yes. Watajuaje, tunatoka RCM, watajuaje. Tuwashtue kabisa. Andika booklet kabisa na jana ni AMA. Great. All right. Ladies and gentlemen, after that, then I would want us to go to the next area where they want us to test the adequacy of the model for prediction purposes. Yeah. Adequacy of the whole model. Remember, adequacy or significance of whole model, yeah, use F statistic. Yeah, and then of course you'll come and give us HO, H1, the model. HO, the null, you say the model is not adequate. Is not adequate. Is not good, is not significant. And then H1, the model is adequate or is significant. So to demonstrate deep understanding, come here, tell us that this model will not be adequate if S is less than the table value given there in the question. If S, Jackie, okay, she's trying to explain how F is gotten, Yeah, which is very good. So you see they have given us the F table's value there, 11.56. But should we calculate our F? Our F calculated, if the F calculated is less than the table's value, then the model is not significant. But if in this case here now the F calculated is greater than or equal to 11.56, then we support H1. We support H1. We support H1. We support H1. All right. Now, ladies and gentlemen, from there, we'll be able to draw our significant chart. It always goes like this. So we have 11.56, shaded region, reject H0, therefore accept H1. Here we shall accept H0. Unshaded means what here? Nothing. Unshaded means what here? Not adequate. So in this case here, we want shaded. So H1 versus what here? H0. Have you guys been able to write up to here? Have you guys been able to write up to here? Yes. Now from there, the last thing is to do the F calculated. So go ahead and do the F calculated. So go ahead here and do the F calculated. Is there somebody who, like Jackie, is able to remember that formula of F calculated? Anybody who is able to remember, like Jackie, F calculated? How do we calculate this F? Or F samples? For those of you who will be doing your thesis at master's level, although master's is not that really intense, at PhD level, you will be doing these things a lot. So F calculated, Rebecca, for the purpose of scaring this examiner, just draw. Of course, you can do without it, but for the purpose of scaring the examiner, draw. So in this case here, it is explained MSS over unexplained MSS. So remember, you have your SS here, you have your degrees of freedom. So we have model. Remember, model is the explained, eh? And then we have, in this case here, yeah, the next one here. I just want to use the exact name they have used. I don't know where mine has gone to, but I will overcome. Error. Yeah, error. So SS stands for sum of squares. So sum of squares, what do we have there? 187. And then 4 like that. Degrees of freedom, they are here, 3. And then we have 9 like that. So give me the mean sum of squares. You can write this in full, mean. So mean, of course, you take SS, you divide by degrees of freedom. Eh? So like this is 187 divided by 3. This is 4 divided by 9 degrees of freedom. So 2 decimal places. Do we have anybody who is able to give us this? Yeah, the first one by 1062.33, yeah? Yeah, this will be 0 point something, right? 0 point something. This will be, is it 2? How did you divide? Aya, Anna. Is it 2? It can't be, it's 4 over 9. 0.44, like that. Then come and place the things here. Give us F calculated. So F calculated will be equal to who? Explained MSS. So explained MSS, ladies and gentlemen, that we have is 62.33 all over this 0.44. Approximately, what figure do we have? Approximately, what figure do we have? 140.2 something, isn't it? 140.2 something, right? So where is 140 on this diagram? Shaded or unshaded region? Where is 140? Shaded or unshaded? Yeah, this 140 is on the shaded region. On shaded region. And therefore, accept who? Accept H1. Or reject H0. It has fallen on the H1 region. So if you're accepting H1, what conclusion do we make? Yeah, the conclusion we make there is that the model for this, the model is adequate for prediction. The model is adequate for prediction purposes. The model is adequate for prediction purposes. So do you think, ladies and gentlemen, now you can build onto that knowledge to become great in this area? Do you think now, ladies and gentlemen, you'll be able to do quite a lot should they bring this area? Don't let me down. Don't let me down. Don't let me down. Thank you so much. So May 2019, question number 2B. Or instead of learning curve, look at this one again. Look at this one now. Look at this one. Look at this one. Look at this one. Look at this one. Anything should come. Now, you see, in inventory management, me, I'm able to see great things. In inventory management, I just want to widen our scope. So if they don't bring safety stock in inventory management, what shall they be able to bring? What else can they bring? This concept of simulation. Reading significance tables. You guys are very good. Many questions. Many questions. Many questions. So May 2019. May 2019. Question number 2B. Question number 2B. So this May 2019 question number 2B, let me know once you guys are able to get this question. May 2019, question number 2B. Except theory. Look at Christine, my friend, now. May 2019, question number 2B. Are we there? Are we there? Got it. May 2019, question number 2B. So I want you guys to do me a favor. I want you guys to do me a favor. I don't know whether we have done this same question in class. Have we done this same question in class? Had we done this very same question in class? No, no. So then I want you to do me a favor, and nobody should really fail to do this. I want you to go and rewatch the video that I did on simulation of inventory. But here I'm giving you an assignment on the LMS. Yeah, you get there. And at this juncture, there is nobody who should be watching a video at speed of 1. Which speed are you watching these videos at? Which speed are you watching these videos at? 2. Does it make sense? I find 1.5 to be good. I find 1.5 to be very good. So I want you to go and lay down that table very well from the video first. And then once you finish watching that video, which should take you like 30 minutes maximum, please, everybody shall do this question. Everybody shall do this question. And this is what you're going to do over this lunch hour. Once you finish in the group doing this particular question, please mention there, done. Or if you have a question after you watch the video, ask the question there, and then I'll be able to set a live class to redo it. But I can't redo it before you put in your hands there. I know what I'm doing. Many students, if I do it right now, many guys will say, this is easy. When the question comes again, we get more than 80% of the students failing, and yet we gave you everything in class. So to avoid that happening, so I direct Tony Mbudia will be able to go to the LMS. Tony Mbudia, take a screenshot of the LMS, circle that particular video on inventory simulation. Everybody shall watch it, even if you know how to do it. Everybody shall watch that video. Even if you know how to do it, then please put a speed of 3. Just try to see how that thing is done, and then give us a very good solution for this one. After that, I will be able to direct you further. Today is a day of advanced management accounting. So even 2 p.m., I'm so sure you guys have time for me. Before 4 p.m., we should be able to do another short class for something very important. Just be around and take instructions. Today is a AMA, so now from tomorrow, you guys can now tell me, Mwalimu AMA, now tuko sawa, let's go to AFR. Does that sound like a good plan? Does that sound like a good plan? Or you have AAA from 2:30. Okay, I was forgetting this. But I feel it's still important that we pick this concept from the video. We can do it very fast, but let's pick this concept from the video. Watch the video, put that solution aside, try to do this question, and then we talk after that. Thank you so much. I know you guys are now getting some things very nicely because you decided to be involved. AMA wants you to be very involved. That is it. So apart from this inventory, which other topic would you want us to do? Which other topic would you want Mwalimu to tackle because you think this one is important or it's tough? Predictions, okay. ABB, you have done it. But you can repeat again. Or pricing, okay. CVP, limiting factor. Optimal safety stock, they're repeating. Optimal safety stock. do something on variances, especially the sales variance. Decision tree, yes. Decision tree, I have to do decision tree. Transfer pricing, mwalimu repeat, no worries. Target costing, okay. All right. So I've been able to pick key areas that we shall be able to do. Yeah, key areas. So we have in this case here sales, variances. Then number 2, key areas. They have told me key areas. Number 2, they have told me mwalimu, do pricing, especially the transfer pricing. Great area, great area, great area, great area. And then they have told me mwalimu, do optimal safety stock after we have watched that video. After we have watched the video. So then if you have a class at 2:30, I don't think it will be wise to do another session of AMA now, but I will call upon everybody. I know now you are very, very good students. I haven't pushed you. I know now everybody will be able to watch the video. Somebody is asking which video, I don't know, but I'm so sure Tony Mbudia will be able to show you the video that you should be able to watch. Thank you so much. It has been a good afternoon. Always. Bye. Bye. Then I do theory myself, okay. Nice lunch, okay. Probability tree simulation. Don't ignore this simulation, please. The question is revision. I don't understand your question, Peter. We shall overcome. Whether you're revising. Yeah. So please ensure that you are doing the question, but you do it, Peter, after you have watched some video online. I know why I want us to watch the video, because the video you can hasten it. You can watch it very fast, and then you understand, you do it, we move on to something different. Thank you. Sorry, is the question on assignment? No. It is May 2019 question 2B. The name of the question is FIDICA Limited, which you should be able to do. And of course, you will not be able to hand it over. The only people who will be able to mark for you are the guys on WhatsApp. So you send it on WhatsApp. Send it on WhatsApp, and then we discuss serious business on WhatsApp. Great. Which topic is this? Simulation of inventory. You know, there are two simulations. A simulation of CVP and a simulation of inventory. We shall be good in simulation, both questions. Thank you so much. All the very best. Next session, wamekataa haiwezi kaanza 2 p.m. kwa sababu kuna AAA. So it means the next one is AFM at what time? At 4 p.m. And then I happen to be free in the evening today from 6 p.m. Can we do this AMA at niko na management accounting intermediate. I'm not free. Sorry for that. Yeah. Sorry for that. Tomorrow 11, yeah. We are continuing with tomorrow 11. But now moving forward from tomorrow, it will be more of AFR. Thank you. I used the last. No. Those, you'll get 0 there. Thank you for bringing up that. When you pick, for example, you have picked some simulation, random numbers for demand. Yeah. When you ask yourself, do I place an order? If you say yes, the next available random number is what you pick. You don't use from back for lead time, no. We continue using those numbers the way they follow each other. And that is the trick I want everybody to learn. Great.